Hey guys, what's up? It's Ace coming to you 4:56 p.m. on January 25th. Hope you guys are doing well. I just wanted to make a real quick market analysis video. I'm going to try to make this one a lot shorter than the other ones I've been making. I think 20 minutes is kind of long, so I'm just going to try to rush through a few things here for you guys as far as what I saw today in the markets and kind of what I'm seeing potentially moving forward. Today we had the market open up here, and this is the S&P 500 E-mini futures, but the New York session opened up right around this candle. We came down a little bit, and then literally over the next few hours we just kind of did a whole lot of nothing. It was very flat, it was very choppy, and then right around the 9 o'clock hour, keep in mind this is Pacific Standard Time, so if we were talking East Coast, we're talking 12 p.m. in the afternoon, we started seeing the markets move up around 1 o'clock, actually, East Coast time. The markets started moving up, and they moved up at the 1 o'clock and 2 o'clock East Coast time, 10, 11 o'clock Pacific Standard Time, and they actually peeked their head outside of this demand zone that we've been in. I thought that was a really, really great move. I'd been looking for something like that. I did buy some SPY calls. You'll see that yellow line right above the demand zone where I'm pointing at right here. I bought some calls as soon as price peaked above the demand zone. It's a very small position. I went out to the February expiration, and the reason why I did that is I felt we would actually see a little bit of a float up today. And hopefully with good Fed meeting minutes tomorrow, we would go ahead and continue to see a rally. I don't know if that's going to happen. We obviously, right after I got in, we retraced and we came right back down into this demand zone. And that is why I'm very glad I only opened up a small position. But as you can see right now, moving into tomorrow's session on the E-mini S&Ps, we're already seeing a little bit of a bullish price action. So it looks like it's anybody's game right now pre-market. I don't know if we're going to get a ton of movement in the after hours market just because we do have the Fed that's going to be talking tomorrow, and I think that's really going to dictate whether or not we go ahead and we get pushed out of this demand zone to the upside, or we're going to slice through it to the downside. I do think today's price action was very interesting because you could see this wick on this candle, today's candle. This candle earlier in the session before we had that sell-off into the last 2 hours of the day looked very much like yesterday's candle. A very small body, very long tail, very bullish. That paired with this candle from the 24th would have been like a tweezers pattern, which is a very bullish pattern with two long wicks and two small bodies, and that would have given me a lot of conviction, especially considering those wicks were dipping inside of this demand zone. That would have been telling me there was some institutional buying going on and that we could go ahead and see a float back up. Okay, we did get a little bit, like I said, of that sell-off in the last 2 hours. It created a little bit of a longer body here on this candle, but we still have a very, very nice wick that coincided with the 3 ATR level. So we bounced literally directly off of 3 ATRs intraday and went back up and then came back down a little bit. So what also I'm noticing here is that we are on a demarc pattern, meaning that in this sequence of down candles, you look at this red triangle here. This was candle number 7 and this was candle number 8 in the down sequence, and then we actually had a demarc signal here, which is this blue box. A demarc signal basically says that when you get like a 9 candle pattern to the downside or an 8 candle pattern to the downside, generally the market is so overextended to the downside, or if it was to the upside, so overextended to the upside, that a reversal, a trend reversal or a pullback is something that is a more highly than likely to take place. So that also gave me conviction, seeing that we were on candle number 8 and to seeing these wicks here inside of demand to go ahead and take that small SPY position. If the Fed is dovish tomorrow and they have a really good meeting and it's positive for the market, I really do think we'll see a rally. I opened my position here. It is out of the money with expiration going into February, and up here is where my my calls would get in the money, at the money. And then of course, if we do float up to this 21 EMA where I think we would get to if we did see a rally, I would do very well on that trade and be pretty profitable on that one. We're also starting to see a shift in momentum here. As you can see, it looks like momentum, the bars, histogram bars have changed color to orange, which is showing some momentum to the upside. So pretty excited to see what tomorrow brings. Once again, there's no guarantee, but if we do get some positive Fed comments and the market reacts well, we can definitely see a little bit of a float up from here. Okay, looking at Nasdaq, Nasdaq finished 14.69% down. We're still in correction territory. Real quick, hopping back to the E-mini S&P. We're only 9.13% off the highs, all-time highs. When I say only, I mean we're not in correction territory yet. Intraday, we have breached into correction territory both yesterday and today. However, though, each time we went ahead and rallied back up and outside of correction territory. So right now, we've yet to close inside of correction territory. Today's close at 9.13. So we are not, I repeat, we are not in a correction on the S&P. On the Nasdaq, however, though, we're at 14.69%. A little bit of a different, or I should say similar story in Nasdaq, just a little bit more deeper into the correction area, but very similar pricing patterns as I just talked about. We have the 7th candle, 8th candle on the D-mark signal on the 9th here. Already today's candle printing on the Nasdaq E-mini futures is is bullish and up about almost 11 points. We did go ahead and see today's price action bounce right off of 3 ATRs. And once again, very similar price action in the NASDAQ. We had this move up to where it looked like we were going to form a very similar candle like we did yesterday, and then sold off last 2 hours to create this little bit of a longer body. But I like the wick. I like the fact that this happened inside of this demand zone here. So we're going to see what happens. Momentum is shifting, and we'll see if we go ahead and we get those good Fed comments and see if we can get a float up. On the Nasdaq, I'd love to see the float up take place and get us outside of correction territory. I'd love to see about a 5% move up and above this 10% marker here. Hopefully that'll happen. We will see. Once again, a lot of what I'm saying is going to really hinge and be based off of what the Fed says tomorrow during their meetings. I think that's really going to move the market one way or the other. Real quick, just to hop into the other markets here, we had gold futures. Gold was interesting because I said the other day, that we came and broke out of the symmetrical triangle. I felt a lot of people were rotating assets on the 19th out of stocks and into gold because we did have this nice breakout from the symmetrical triangle, smacked our head on the supply zone, dojied, and then I thought we were going to roll over a little bit on gold because I said we're going to most likely either roll over and go back down, or we're just going to chop around here because we have such a massive amount of supply up above here that I did not think gold would just float and right into this area too easily. Now, if we do see a sell-off in the market, a hard sell-off, I think we can get up here in gold. So if the Fed said something stupid and the market really ripped to the downside, then I think gold could float up in here. But I do think we have a lot of institutional sell orders up in this area. So I think gold's going to have a very hard time rising. I'm expecting gold to chop around, maybe to retrace. That's originally what I thought. Although today and yesterday's price action is pretty bullish. So we'll have to see where gold goes to. But gold is almost like been in a little bit of this range area with a lot of supply above and a lot of demand below. So we'll have to see how that all shakes out here. Hopping into oil real quick. On oil, I had said here that I thought that oil was going to get another push up because we had this hammer candle here on a pretty good size volume. And then the funny thing is the very next day we rolled over with volume on the sell side. And as you can see, the TMO's red and momentum was waning. However, though, today we came right back with some buying, up 2.75% on oil, and then we're in this little doji candle. Tomorrow's candle is like a little doji candle, so obviously we're still printing price action there, but I am not so confident that we're going to see these moving averages as I had hoped when I saw this rollover candle. There, I think, is a very good chance that we could go ahead and get some more bullish movement to the upside. We have these wicks down here, which is showing buying pressure, and I do think we could go ahead and push right out of the supply zone. And if we do, guys, look at what's up ahead. More supply, and a lot of it. So I don't know how much higher oil's going to get in the near term. I mean, could we break out of this and float up to 90 a barrel? Absolutely. I don't know if we're going to go much higher than that because I think there's a lot of institutional sell orders hanging out up here. We will have to see, but I'm keeping my eye very close on oil because let's just face it, freaking oil's been out of control, and the higher oil goes, the higher our gas prices go. So it's always a good thing to take a look at. And then right here on bonds, we had a bear gap trap yesterday where we gapped up, retraced. We actually went ahead and retraced the entire doji candle of the 21st, and then today we went ahead and continued to see a little bit of selling in bonds. So I think it's, bonds is going to be a wait and see based on what the market does here tomorrow. The VIX, this is something I wanted to show you guys. I've been talking about these blowout candles, waiting for the blowout candle to come. We got the blowout candle yesterday on the VIX, huge from 40 all the way down to 30, literally 10-point move on the VIX from top to bottom. And I was looking for that. I was looking for this. This is what I call a blowout candle. And then today, the VIX did finish up 1.28% because we did have that sell off for the last 2 hours of the day. But if you were watching the market intraday, when I opened up those SPY calls I told you about, the VIX is actually down 1.74%. So it looked like we were actually going to have a red day on the VIX, which would have been extremely amazing because that would have showed me that fear was subsiding, obviously with the market rising, but we did get that sell off. So I think the VIX rose a little bit and finished up a little bit ahead, 4.28%. But I still like the overall blowout candle, and the fact that we have this wick here on today's price action shows that, you know, fear is subsiding. That's what this is showing me right now. Now, does that mean that tomorrow, if the Fed says something stupid, this can't rip back up? Of course it can, because fear will come back into the market. But if the Fed is dovish, if the comments are good, if the meetings are good, I think we're at that point now where we could see that rollover, just like we saw it here. Blowout candle, rollover. Let's just see this pattern over and over. Blowout candle, rollover. Here's a high wick candle, rollover. Blowout candle, rollover. Blowout candle, rollover. So you guys can see this is like a self-fulfilling prophecy. We get these blowout candles, and then as soon as they blow out, we get the VIX that rolls over. And when the VIX rolls over, the market goes higher. So I'm seeing that here, and I'm hoping with some good Fed comments, we get that rollover and we can go ahead and get back to the market moving higher, and everybody will win that way in their 401ks and 403bs and IRAs and all that other good stuff. Okay. As far as the dollar goes, the dollar today finished slightly up. I mean, it's almost negligible, 0.04%. So really, we can almost call it a flat day on the dollar. Remember, when the dollar goes up, generally it's bad for the market, and when the dollar goes down, it's good for the market. So we're up here against this trend line. I'd love to see this roll over and head towards the downside of the symmetrical triangle that it's been forming. We'll see what happens. I think that's going to be contingent on what happens with the market tomorrow and with the Fed. And then last but not least, crypto. Everybody loves crypto. I've been calling this sucker perfectly. If you guys watch my last few videos, man, I've called crypto absolutely perfectly. We had an old demand zone in here that got breached, and I said that we would slice through that demand zone and we'd find support down here. This candle sliced through that old demand zone that was right in here, and we did find support exactly where I said we would, right in this demand zone. And as you guys can see, we were printing the 7th and 8th down candle in the sequence, demarked right here. And then of course, as you see, these wicks is showing you buying pressure right here in this demand zone. So I do feel we have some institutional buy orders in here. This price came down and literally barely touched demand, came back up, and then we had this wick come down into demand, immediately got bought back up, and then just dojied out today. So it's a very flat day today on crypto. Overall, I'm bullish on crypto overall, not now obviously, because I need to go ahead and see price come back up past these moving averages and break out of this channel before I could really start feeling like I can, you know, want to start buying a lot of crypto and getting along the overall crypto market. I think in the long run, and when I say the long run, years, I think I'm super bullish on crypto. I think it's like the next great thing as far as money goes. But in the shorter term, in terms of where we are on the actual charts, it's not a buy yet. It won't be a buy for me until we can get out of this downward channel that we've been in and start seeing a little bit more of a bullish conviction. But I don't know if we're going to go any lower, because like I said, I think this is the line in the sand with institutional buyers being willing to step in and holding Bitcoin above this 33, let's just call it $34,000 level. Okay. Anyways, guys, that's my video. I hope you enjoyed it. Please give me a quick like if you guys don't mind. A thumbs up would be really awesome on these videos. It helps get them out to people so they can go ahead and see my market commentary. Be sure to subscribe to my channel. I have all new content on the way. I have a credit spread video I'm just about done with that's going to teach you how to write credit spreads and give you the basics on writing credit spreads and some really good tips and tricks for being successful on credit spread writing. That's been requested, and so I'm just about done with that video. And be sure to ring that bell icon, guys, so that way you're alerted when I do have new videos coming out. I really appreciate you guys. Thank you so much for watching. God bless. Trade well, and let's see what the Fed says tomorrow. And I'll keep bringing these videos out to you, and we'll take it step by step and get through this down market and back into the good stuff. Okay? Take care, guys.